And now, more with Social Women, with your hosts, Pat Cruz, Amy Diaz, and Bronwyn Dannenfelser.
Chat with Stephen Monacelli of Restivo and Monacelli, an incredible firm here in Providence, and we're going to learn a little bit about taxes and money. And yeah, I think I need a little help with that. And anyway,
especially considering we're
all the money I want to spend on new Tiffany jewelry. Yes. So thank you so much for being here, Stephen.
Oh, thank you for having me.
Absolutely. Well, you know, it's the perfect time to talk about finances and taxes. With it's tax time, isn't it? Now, between now and April 15th. So we're really glad to have you here, because I think that there's, you know, a couple of things that we should kind of address as we look at taxes. I think they can be overwhelming for people, including me. And, you know, we'd love to give some people out there some tips as to how to file your taxes, what we're missing, big mistakes that people make. So why don't you tell us a little bit about yourself first?
Sure. I am a partner with Restivo Monacelli. The focus of my area is taxation. I've been practicing for more than 25 years in this area, and we address high net worth individuals, high income individuals, and privately held businesses. Okay. And that is my area of focus. And what I was hoping to do today is touch on some areas of personal financial planning to try to achieve financial independence, because I think it's important that people have a long-term plan to attain financial independence. Obviously, preparing taxes and planning for your tax returns every year is part of it. Mm-hmm. Retirement planning is part of it, and accumulation of wealth is certainly a significant part of it. So I was hoping to explore and touch upon some tax opportunities, but at the same time talk specifically about women and the challenges that they have. When I look at you know, some of the literature.
Spending too much money is the challenge we have.
Especially after following the act of Peter from Tiffany's. There appears to be a salary differential.
Can Tiffany be a write-off?
Well,
is there a tax deduction
business
for Tiffany?
expense
Yeah,
somehow.
It's funny. That's a good comment. You can give business gifts up to $35 per person, but I'm not quite sure if there are anything's for sale in Tiffany's for $35.
I'm sure there is.
I don't know about that.
I'm sure there's something. I know Peter would find something for us.
Well, you know, because I saw what you sent over earlier, and I found some of the things you had in there that you pointed out. Well, because we talk about financial stability, and as we go into taxes and tax filing, one of the things that we need to look at is how we're saving money, how we're choosing to spend our money, and that all comes from being educated as to what our options are and what we're looking at. And you put down a point here, which I found fascinating, about salary differentials between men and women. What's the number there that we're seeing?
You know, I'm not exactly sure what the number is, but there is a lot of literature, a lot of people talking on the topic. And it just provides women a little bit more of a disadvantage from men, and I don't know why that is, but certainly there's a lot of talk relative to that point.
So as we're planning for our future, we're trying to figure out how we're going to navigate these waters of, you know, even looking as far ahead. A lot of people are just trying to survive right now. But as we even look to, you know, our retirement or anything like that, you also say here that, and this is crazy, but and it makes sense, I guess, childbearing years may affect the earnings and or career advancement opportunities, which in turn affects the ability to amass wealth. So if you are a single mom and you are of childbearing age,
all about that one.
by the time that you're, how do you advise people to start saving so that we can play catch up? I guess because you know, your mom, Pat. I mean, your time is spent taking care of your kids. So, Steve, how do we attack that at an early age?
It's a very good question. One of my recommendations is for people to start at a very early age in saving for retirement, trying to build wealth. Obviously, there are times when you're going through the childbearing ages or the child raising ages where you've got an extreme demand for income and you've got expenses with the kids, whether it's child daycare or what have you. It's important that you take advantage of everything that you're entitled to from an income tax code perspective.
What would some of those be that maybe people wouldn't think about automatically for a single mom?
Obviously, there's a tax credit for dependent care expenses. Obviously, most people are taking advantage of that, and that's pretty well known. I would be very optimistic in trying to accumulate some wealth. And one of the most fascinating things that I recommend and it works, is try to save along with your net. Assuming you get a net paycheck and you're not self-employed, try to save and split the direct deposit between two accounts. One, your operating expenses to fund your everyday or monthly expenses, and the other goes to an investment account or a brokerage account so that you really don't see that money coming out of your expenditures. If you save it until the end, you may not necessarily put it aside.
We would spend it if we so no, but you don't feel the pain if you don't see it. Like, and so as you said, you kind of put it in an account, and that's the account you don't touch. It's a nice place to start, and I guess it amasses some wealth over a period of time if you're just putting a little bit away, right, a little bit at a time.
You'd be surprised how quickly it grows. Now, in also to your question, what I would also do is, when people turn age 50, they have an opportunity to put some additional monies in their retirement plans. It's called a catch-up contribution, and the limitations are a little bit higher, and it's important for people who reach 50 to try to take advantage of that, especially after you've gone through a period, when you're raising the kids. In order to support your family, you need that money, for that discretionary money to spend on the children at that time.
Yeah, I think there's, again, a lot of what we do is our knowledge as to what we're looking at and our planning and actually writing stuff down, keeping a tax diary, for instance. And I'm going to bring this back to income taxes because, and I guess I'm being selfish here, and I have an accountant that does my taxes for me, but I've got some questions that people asked me that I want to ask about, which is for people who do are concerned about filing their taxes, online versus going to an accountant. Do you have anything to say about what might be better, or who's in a better position to do it online and who really should be going to an accountant?
That's a very good question. For the most part, my firm focuses on high net worth individuals and high income individuals. And
not me.
For those types of individuals, there may be planning opportunities, and it makes all the sense in the world to have a CPA firm or a professional tax preparer prepare your taxes. For the average American, an online tax preparation tool is absolutely a phenomenal way to go.
Okay.
If you've got access through many of the brokerage firms, they'll even provide you free access to some of the tax preparation software. It's actually very good. If you've got someone who inputs in accordance with the directions, this should be able to get a pretty good outcome.
Nice. And would you have any tips, about deductions that maybe, because you're an expert here, and so we want to tell our viewers all these.
We want to pick your brain.
Yeah, we want to pick your brain.
Sure.
Are there certain things that we overlook that would be deductions that, because again, if we start in January and we're keeping a tax diary and we're trying to figure out, we decide we're going to go to a financial planner and get our accounting, and we'll look to the future, but what is it that people normally overlook that we should be saving those receipts?
That's a good question. What I typically do, and I'll just explain my household, anytime I spend some money throughout the course of the year where I think there's a deduction that may be eligible, I will create a separate folder and put everything in that folder for the year. So at the end of the year, I dig the folder out and I look through it. For instance, trips to Goodwill or the Salvation Army. I would put a very detailed listing of what was given so that you can come up with a value that can be considered a thrift value, so that you've got some number at the end of the year as opposed to just looking at a blank receipt at the end of the year, not sharing what you gave. So that's one thing.
That's a neat thing, because Pat, you donate a lot of stuff.
I, in this past year, must have donated, those big black garbage bags from BJ's, like 7 or 8 of those, and I just do that all the time. Every time I go through my closet, I'm like, I'm done with all of this, and I do that all the time, but I never even think about saving anything or
so
trying to
there's
figure out
charitable
how much
deductions that people probably just don't even think of tracking. That you keep track of that $25 that you just gave to the American Heart Association or whatever it is that you've been to, and that kind of adds up. And these are things that if we remember just to save them, then it helps us at the end of the year.
Stick it in a file, just whatever it is, stick it in a file. That's my theory is stick everything in the file and then hand it to the accountant and say, here,
good luck.
figure this out.
Just a quick question. Do you have to have the physical receipts, or can I just go through my bank account and say, look, this was from everything that I've spent or I've done, or does it have to be physical receipts that we have to give our accountant?
Anything more than $250, the IRS requires that you keep an actual receipt from the institution.
Okay.
In addition to your canceled check or receipt.
Okay.
But one thing I will add for the high net worth and high income individuals, when you're considering charitable contributions, take a look through your stock portfolio, and if you have appreciated securities that you'd like to gift, you can actually gift those securities without paying the tax on the capital gains. So it's a nice way, if you're giving back to the community, to take a tax deduction without recognizing a gain on the sale of the security to do that.
Oh, wow.
One of the things I would suggest is, obviously, go back to old school. If you don't have the cash, unless it's an absolute necessity, don't charge. Just try to dwindle down your credit card debt.
Yeah, can I ask you something about credit cards, though? Because recently, I've been getting a lot of offers, and it's the 0% financing. Like, so it's I've actually gotten 2 of these cards for 0% till 2013, and I get all these points for it. So I've been noticing I am spending a little bit more because I keep going, well, I'm getting points for it. But I started to think, is there a way to use these essentially? And so what I started doing is I pay my electricity bill and my heating and gas bill on the credit cards, where I'm going to get points that I can use to travel in the future, and there's a 0% interest rate on those. What are the pitfalls that I'm missing, or that in about a year I'm going to go, oh my God, I wish I didn't use those 0% cards?
That's a very good question. I'm all in favor of it, provided at the end of the day, when the interest rate becomes this astronomical interest rate, that you can afford to pay it off. And in the meantime, you've got, great points for travel, but I would be careful if people are accumulating to the point where, oh my God, now the interest rate's 18%, I've got to dwindle this down. And it's somewhat of a trap. Yeah.
And that's what I've been saying to my husband. I'm like, I really, because I spend more because I'm not seeing the cash go out like my hands.
Yeah.
But, thank you so much for talking to us today. There is so much more we could talk about financially.
We've got about 15 more segments on this paper
I
here.
know,
that
yes, we
get
do.
into.
We do. Thank you so much, Stephen. How can our listeners get in touch with you?
Well, our office number is 401-273-7600. And I'd be happy to assist anyone who calls. Our initial consultations are free.
Great. Thank you so
Fabulous.
very
We'll
much.
post your information as well.
Yes,
on our
a lot of our
Facebook
viewers,
page.
a lot of our viewers here on Ustream have thanked us for bringing you on. They're very excited and grateful for all of your tips.
Thank you very much. Thank you for having me.